everyone, welcome to my second video for our IGCSE accounting. So here we go, let's start. Today we're going to look on the main concepts in accounting under the introduction chapter. So one of the main concepts in accounting is number one, assets. So what are assets? Assets basically something that belongs to us. It's mine, this is mine, my stuff. Like what? If you have a shop, okay, whatever is inside your shop, that is being yours. Okay, so we have two ideas here under assets. Number one, non-current assets. Okay, assets basically something that we own, something that belongs to us. Okay, non-current asset means asset which have long life, meaning it will be there. We buy it, we use it for long time, meaning more than 1 year. So it could be 5 years, 10 years, 20 years, 30 years, 40 years. Yeah. Before it goes crazy, before it spoils, then we sell. For example, we have, let's say, air conditioner. Air conditioner. We buy it, we use it, let's say 10 years. At the 11th year, it goes soft, it spoils, break down. Then we sold it off and we get some money over here. So non-current asset means things that has a long useful life and expect to provide us with support in order for us to earn income for a very long period. It will be just there to support us. Those are non-current assets. It will take a long time before it turns into money. This is the main thing. You turn into money after a very long time. Okay, for example, we can have, okay, just now I mentioned aircon, right? AC. So AC is basically our fixtures and fittings. Something that is fixed on the wall. Other than aircon, we also can have our fan, like ceiling fan, okay, or the wall fan, OHP projectors, and, well, our bathroom. What kind of bathroom? What are the things I'm referring to the bathroom? For example, toilet bowl, shower equipment. Those are fixtures and fittings. Okay, we also have things such as our cars, van, motorcycle. Those things are known as our motor vehicles in accounting. Okay, so the ones on the left side that I've just written down here are the ones that you will see in the exam. And you need to classify them into the correct category, the classifications, under this and this. Okay, this is something that we need to know. We also have our shops, which is known as our premise. We could also have things such as, well, this is others. We have our lands and building. We can also have our machinery. Okay, machines, huge ones, especially normally in manufacturing companies. Okay, so land, buildings, and machinery. These are some of the examples to share with you all. Now, the next type of assets that we have is called the current assets. Now, if you look at words, right? Just now, non-current asset means more than 1 year that you'll be using them with you. Now, current assets, take out the non, which means it will be there for less than a year then. So these are assets that also belong to us, or somebody owe us money. That's why it's belong to us. So they are there to give us economic benefits, they call it, basically to say money within a year. Okay, it could be few months time. For example, we could have our inventory. Okay, our goods. Okay, the things that we buy to sell is called inventory, because we will be selling them in the next coming few months time, and we can gain money out of it. Credit customer. These are called our trade receivables. Customers that owe us money, they buy our stuff. We sell the goods to them already, but we still haven't get the money from them yet. Later on, they will give it to us, the money. This is called credit transactions. Okay, transactions, we have two types. One is the cash transaction, meaning ASAP, on the spot, we pay money at the point we make the purchase. So one hand gives us the goods, another hand will give the money. That is credit. So that's the cash transactions. Credit transactions means you get the goods now, but you pay later. That is credit transactions. Okay, so talking about this, so let me highlight. We have our cash transactions. Okay, money and goods now on the spot. For example, we buy something in the shop. Credit transactions, meaning later pay, goods get now. Okay, this is something very new. Now next, whenever we see words such as checks, they will mean our bank. When we see cash, that means cash is cash. Okay, so these are the few things that belongs to us and that would turn into money within a very, very short term. The best example is this. And for checks and bank, and then the cash is already there. Okay, it would just turn with when cash goes out and get cash, you just get it. But for the checks, you have to wait for a few days. Then only it will go into our bank if we receive check. If we pay the check, then the check will go out, meaning the money from the bank will be deducted within the next few days. Okay, so this is non-current asset and current assets. Now, if we have something that belongs to us, definitely there will be something that belongs to other people, in which we owe people money. This is called a liability. Something that we owe people out there. Okay, basically we call it the debts in short. Now we have non-current liability. So non-current liabilities are monies that to be paid in few years' time. In few years' time or many, many years' time. Again, more than 1 year. For example, we have long-term loan, bank loan, or sometimes we have mortgage loan. We borrow money in order to purchase another shop as our second branch. So we have a mortgage. Okay. Now, if we have non-current, then we will be also having something called the current liabilities. So current liabilities will be the exact opposite. That's to be paid within 1 year's time. So less than 1 year, or within the 1 year. How many months? Few months, 3 months, 6 months, 9 months, or 12 months, meaning 1 year. For example, we have something called our credit suppliers. This is actually termed as trade payables. Okay, and there's another one more, which is called the bank overdraft. Okay, so this is something new. So what is bank overdraft? A BO. So imagine this. We have a bank balance in the bank. We already reached a situation where we have no more money. Now, businesses only happens in businesses we can achieve something called a negative balance. So we still can swipe our cards, let's say 10K, and therefore we will have a negative 10,000 of bank overdraft. So this 10K bank overdraft means really overuse it. It only applies to businesses that has a current account in banks. So there are two types of accounts that we open in banks. One is the savings accounts like normal you and I and normal people. But those who are doing businesses, companies, they have a special account called the current account in the bank, not savings accounts. Yeah. Only current accounts has the access to a bank overdraft, short-term financial facilities provided by the banks out there, whereby if you need cash as an emergency, the bank will provide you up to 10K facilities. Different companies has a different bank overdraft credit limit. Okay, so like let's say for you, let's say you have one company, your limit is up to 10,000. Further than that, you may not able to continue to swipe the cards. Okay, when you buy goods or anything for your company. Okay, so different company has a different bank overdraft limit. So that will be negotiation between you and the bank. Okay, so this is current liabilities and also non-current liabilities. Now, another special concept here in accounting is called the owner's equity. Sometimes we call it as the capital. So owner's equity, the capital, the so-called all the resources that we put into the company by the owner. Okay, so it's like as if the company is owing you money. So it is something that the business owes the owner. I'm like, huh? Business owe you? You your own self owe yourself. So it's like this. There's a special concept called the separate entity concept, whereby you are the boss and this is your child, the company. It has a feet, it has hands. Yeah, what's your company's name? ABC company. Whatever that you invested in your company, you set up the company, you think about his name. Okay, let's say in Malaysia, when you want to set up a company, you need something called your SSM. The Suruhanjaya Syarikat Malaysia is where the company's registrar which is located in KL. Nowadays, you can do it online. Yeah, and then all the licensing, let's say MPSJ, the DBKL ones in the from KL region here, and then all the money that you invested in, all the non-current assets that you bring from home or you buy personally using your own cash and you place inside your company. These are things called as capital. Okay, so you put all this capital, you inject them into your baby, then your company will start moving and making monies for you. Yeah. So if you take out something from your company and you use it for personal use, okay, you can take out some goods, the inventory, or any non-current assets, or any monies from the company, and you use it for personal use, this is called drawings. Something that you take out from the company for your own usage, this is called drawings. And during the process of your company doing the businesses, if let's say company makes money, whereby its income through the sales or any other extra income, less of its expenses, whereby you buy something, you buy goods, you pay money for the rent, the insurance, all the electricity bill, the water bill, all these expenses. At the end of the day, if a company makes money, whereby your income over than your expenses, you get profit. If, let's say, your expenses is more than your income, you get a loss. Okay, so there are a few things inside owner's equity. We have the capital, we have the drawings, and we have the profit or loss. So this is the owner's equity portion. Okay, all the capital, all everything as a whole. The opening capital and then all the closing capital. So we have our opening capital plus all the any other additional capital that we put inside the company. We add the profit or we minus the losses, then we minus off the drawings, you get your closing capital. So this is our owner's equity. And once the company closes off bankruptcy, or let's say you feel like you don't want to do all the businesses anymore. So whatever you pay off all the debts, and then after that, whatever is left, you take it out. So that is when the business pays back the owner. As long as the company is still on a going concern basis, meaning it's still running like almost forever and will not be closing, the company owes the owner until it closes. Right? So this is equity. Now, we stop here for today, and I'll see you soon again. Bye-bye.